Welcome back, fellow speculators, to the Speculator's Edge, where super performance begins and opportunities await. I'm your host, Berg. So today I'm going to go over several charts. I'm going to show you how you can achieve super performance and make some massive gains with these stocks here, okay? Because they're breaking out, they're ripe, they're ready to go. And other than that, you know, this past week was really difficult on trading. But I'm going to show you with these stocks how you can manage your risk and position size accordingly, okay? So there's going to be a lot of education, a lot of information within this video. But other than that, I'm going to dive into it more on a technical theme than the fundamental theme, so I'm kind of switching it up today a little bit. So other than that, before we do dive in, if you haven't already subscribed, please do. You can click on the TSE logo in the bottom right hand corner of this video. So like the video, leave a comment. If you have any questions, I'll be more than happy to help you. So let's go ahead and get a move on, because time is money, okay? Okay guys, so the first thing that we're going to, the first chart that we're going to go over is ATTO. Okay, this one here is Atento, which they're in the industrial sector and business support services industry, okay? So, like I said, what we're going to do is we're just going to go over on a technical theme. I'm going to show you the risk management and how to position size accordingly, okay? So, what we're in here, of course, we already have a prior uptrend of greater than 25%, okay, from low to high. And we are in a stage 2 uptrend, of course, as you can tell by the moving averages. Not only that, the larger moving, or the 150 day and the 200 day moving average are moving up. That's what you want to see, okay? So other than that, we do have a primary base here happening, working out in this stock, more of a double bottom pattern right here, okay, or you can say even a rounding bottom as well. But so what I like about this stock and what I dislike, let me go over the dislike right here, is this gap down right here, okay? And there's some decent volume, but we do have some pretty good volume coming in today in this stock right now, and it is getting over this this super pivot right here. I would like to see it close that gap, because when price does close a gap, it gives it more like a higher probability of it actually moving in the direction, okay? So other than that, I'm going to take my hat off. My head's a little hot. So other than that, we got volume. Volume did dry up right here. We do have nice tight price action, okay, happening with that. So that's good to see. Price is starting to move up really well today. So how you want to manage yourself or manage the risk that you're going to take in this stock. Let's say if you're going to buy at $21.87, let's go to the position sizing calculator here, and let's go over this. So we're going to buy at $27, okay? So our buy point is going to be at $21.87 right here, okay? And let's say where our stop is going to be. Let's say we're going to place our stop, however you want to put it. Let's put it, to me, I like to take the low of the day, but also you can take the low of the base as well. So let's just take the low of the day today, and it's at $21.10, okay? If you're going to place it about 3 cents below that low. So you're going to place it around $21.07, okay? So let's go back to the position sizing calculator, and let's do that here. So at $21.07, so at 21.07, you're going to be taking about a 3.66% loss, okay? So when you do this, what are you willing to risk on this trade, okay? So you got to ask yourself, how much money are you willing to risk, okay? How much money are you willing to lose, okay? So let's say we're willing to lose 1% of the total account equity, okay? So this $10,000, we're only willing to lose $100, okay? So according to the position sizing calculator on the math, you're going to place your trade, and at 21.87, put your stop at 21.07, and that allows your position to be $2,733.75. So you're going to buy 125 shares, okay? So practically, you're only playing with you know, 25% of your account, which that's pretty good. Okay, that's good. 25%. You really don't want to go any higher than that on most trades. Okay. Don't be going in, you know, 40-50% of your account, because you know, you never know what the stock's going to do, because you know, tomorrow's not it's not promised, you know, so it could it could slaughter you, and yeah, it's not fun. So I've been there, done that, and yeah, it's a lot of pain. So I don't want you suffering that, and this is why I'm suffering through that. This is why I'm showing you the risk management and the position sizing. Okay. So, like I said, your stop loss is going to be 3.66%. What you're going to want to do is you're going to look for a profit target of anywhere to about 10.97%, okay? So that's about 3 times your risk. That's what you want in your reward, okay? You want it around 3 times that. 2 times is good too, but 3 times is even better. 4 times greater. 5 times even better, okay? So depending on where you want to take this, I mean, your profit target is going to be at $10.97, okay? So your profit target in dollar terms, you're going to want to start taking profits at around $24.27, okay? So that's, let's go back and let's look at the chart here. So at that $24.27, it's got to move up, you know, right around in this area right here where there is quite a bit of resistance. So that's a, you know, likely situation or scenario that the stock could, you know, run up to those levels. So not bad, okay? So other than that, this stock is looking pretty good right here. Like I said, I'd rather see it cover this gap, but if you're wanting to buy today, then buy today, okay? This is not a recommendation. I'm not a financial advisor. I'm not a broker, so whatever you do is on you. So you got to take responsibility for your own actions when buying, okay? I'm just showing you how to position size appropriately and manage your risk, okay? That's what it's all about. This is what trading is all about. You got to survive, you got to be able to eat, and you got to be able to have that cash spot ready for the next opportunity, because there's always opportunity around the corner, and huge opportunity. I mean, you can see it with like TRCH, you know, TRCH, which is Torchlight Energy Resources. I traded that at $2.60. Go look at it now. It's like up past $9, okay? But when you're doing it, that's what it's all about. You got to be prepared for the next opportunity. So you got to save your cash, okay? You do not want that to deplete, because there are a lot of chances in this market. The market gives you a ton of chances to make a lot of money, okay, and quickly as well, okay? So let's go ahead and go over another one here that I like, GBR. This is going to be New Concept Energy. They are in the real estate sector and the real estate development industry within that sector, okay? This stock already moved up. Oh, man. Okay, well... Okay, well, I was catching this stock in around 650 or so, around 640, somewhere around there, and it's already moved up, you know, another 15%. So sorry about that, guys, that and gals. That's okay. Well, other than that, the reason why the reason why I like this stock is because we are in this nice stage 2. We already had this prior trend of greater than 25%. This is consolidated into a secondary base right here in a rounding bottom. I love these rounding bottoms. They put in a lot of work around these moving averages, which shows you that there are institutions buying or accumulating shares within this, okay? And it's great to see this, but other than that, we've already missed the proverbial train on this, so I'm going to skip this stock. Don't recommend buying into this right here. But if you do, you do, and if you're going to place your stop, yeah, that's a tough situation. You'd probably want to place your stop anywhere at around, you know, 5% or so, you know, if you want 10%, but I wouldn't even do that if I was you. Yeah, this one's just blowing out the water. It's blowing and going. So I'm going to skip this one here, and we're going to move on to HQI. I do like this stock right here as well. This is breaking out of a nice rounding or of a double bottom with kind of a handle happening right here. I would have rather seen this handle move downwards, but it's okay. It's moving up here, and we do have high volume breaking out right here to 52-week highs. And you know, we are more in a in a third base. This is more of a third base. As you can see, not only that, there's tons of accumulation on this 50-day moving average, and the 50-day moving average is still moving up. You're buying into momentum, okay? So a huge day right here. You can see volume dry up right here, and then a huge day just pop right here. And of course got past this super pivot. So if you were buying right here, that would have been a good entry point. But this is also a good entry point too right here. Not only that, the relative strength is making new highs. The relative strength line or performance line compared to the S&P 500 NASDAQ, it is making new highs as well. So, but what I like is I like this volume dry up right here, and you can see it in the price action as well. And then it just pops right off that 50-day moving average. All that's telling you right there with that high volume is that there are institutions within this stock, okay? So that's a good thing to see. That's what we want to see. And not only that, now it's moving up. It's got some momentum, and it's got some high volume right here coming out of that 52-week, okay? So when you're going to place this trade, look to look to place it around the low of this little consolidation, of this 4-day consolidation right here. So you're going to look at it around probably around $20.33, okay? So let's go check that out real quick on the position sizing calculator here. So let's say we're going to buy right now at $21.80, so $21.80. And let's say we're going to place our stop at, again, like I said, at that low being at around 20.33. So you're going to place it at 20.30, okay? So at 20.30, your percent loss, your stop loss percent is 6.88%. That's a pretty good stop right there, okay? That's not bad. So what you're going to be, like I said, what are you willing to risk on this trade? You got to always ask yourself how much money you're willing to risk, okay? So are you willing to lose, $100, $200, $300, $400, $500, depending on your account size? You can make it a little bit larger. So I mean, that, like I said, that all just depends on you, okay, and what you're comfortable with. So let's say we're only willing to risk 1%, okay? I don't recommend going over 1.5%, okay? That's just my thought. That's how I am, because if you think about it, let's say if you have 5 losing trades, do the math on that. That's about 7.5% right there just in the loss, okay, of your total account equity. So if you have $10,000, well, guess what? You've already lost 7.5% of your total account equity on those, on those trades. So that's what I'm talking about when you're doing this here. Don't go over 1.5%. That's dangerous because, like I said, you want as much opportunity as you can. You want to keep your money safe. You want to keep it tight, okay? And so the position size, what you're going to position size is you're going to use, out of a $10,000 account, you're going to use $1,453, okay? So nearly 15% of your account. That's okay. That's not bad, okay? So you're going to buy 66 shares right here at $21.80. Okay, so your percent profit target is going to be around 20.64%. So you got to let the stock run up to around 20%, and then you can start taking profits on it, okay? But so your profit target in dollar terms is going to be around $26.30, okay? So other than that, like I said, with this being at a 6.88% stop loss, that's not bad. Usually I like it anywhere between 3 and 5%, but anywhere, even 3 to 8% is okay. I mean, when they're breaking out of a base, when a stock's breaking out of a base, usually the price will run up anywhere between 20 and 30%, depending on the stock that you have. It could run up, up to 100% before forming a new base. But usually when stocks do break out of their bases or their patterns, they'll run up another 20-30%, then they'll start consolidating again, okay? So you do have shorter term investors and traders taking their profits and all that, some institutions taking their money off the table as well. So you have selling, and that's just the way the stocks work, okay? So they'll form another base or another pattern and go through the same process again until they run out of steam and investors or institutions don't want it anymore, okay? And that's the way that works with that. So let's go back to the chart here, and let's go look at HQI again. Like I said, this is a good trade. This is a really nice looking trade right here. So we do have some momentum within this stock. Other than that, like I said, this is not a recommendation to buy this stock. So let's go look at THTX here. THTX, I saw this Friday, and I mentioned it to a good friend, Dan Fitzpatrick, which I'm doing some work for, and very well known through the industry in trading. If anything, go look at his website at stockmarketmentor.com. Really great guy. I mean, this guy he's an excellent guy. He's a giant in this field, okay? But other than that, I mentioned this one to him, and because it popped up on my scan here. And how you want to position yourself, like I said, you got this prior trend right here at 25%, and then you have this stage 2 uptrend, moving averages being above each other, short-term moving averages being above the longer-term moving averages, and then you have this nice, primary base with a kind of a rounding bottom pattern, or maybe a double bottom pattern, or you can even say like a cup with handle pattern right here. So the cup being right here, the handle being here, or the double bottom happening right here, breaking over this nice super pivot right here, and bursting out on some decent volume. Okay, the volume's not bad here. It's above the 50-day moving average of the volume, so it's moving really well today. Okay, so how you'd want to place this trade is, let's say it's at $3.84. That's where you want to buy. That's where you want to buy your. That's where we're buying the stock at, $3.84. The low is at $3.56. So if you want to place that right there, that's going to be it's going to be a decent stop loss right there. I mean, that's going to be a pretty big stop actually. So the low is at 356. Let's go and look at that, and let's put that in perspective here. So if we're buying right there, so let's say the buy point 384, and the stop is, of course, like I said, at 356. So let's place it 353. That gives you about an 8%. Okay, that's not too bad, and that's not bad at all. So at 3 times of what you want to make, and that is the percent profit target is going to be at 24%. That ain't bad. Okay, so I mean, even running up to the 52-week highs from here, you're getting nearly a 10% already. So I mean, that's not bad. At Bradley, you're kind of breaking even right there. It's not bad, but like I said, you still want that. You want that 24%. Okay, you want that 24%. Okay, so what you would do if you had a $10,000 account, you're willing to risk $100 on it or lose $100. So that's 1% of the account. How you're going to position size that is, you're going to come in, you're going to buy 322 shares for a total of $1,238. So you're using about 12% of your total account. Okay, not bad either. Okay, not a bad position size. So when you do position size, and your position sizing a little smaller, say like 10%, 15%. If the stock's moving up, you can always buy into that momentum. Not only that, when the stock, so let's go back and let's look at the chart here. So if the stock decides that it wants to pull back, let's say it moves up here and gets right here, let's say it pulls back right here. If you still really feel strong about this stock and you still want some more profits and you think it's going to go back up, you can start buying when it moves back up out of this little, consolidation. When it drops down, you can start buying when it moves up. Okay, that's how you do it. I mean, you can position size a little bit more in there. So you can buy another $1,000 worth. Okay, you can have a quarter of your account equity in it. Okay, so you can have nearly 20%, so 2,000, or you can make it to where you're going to put in 25% on this stock. And that's just called pyramiding. And not only that, it's progressive exposure within the stock. Okay, this is how a lot of guys that have made tons of money in the stock market, this is how they've done it. Like William O'Neill, for instance, of Investors Business Daily. This is how he did. He pyramided in, so he progressively exposed his account with these monster winners. Okay, with these super performers, and that's how you do that. Okay, so other than that, like I said, this isn't a recommendation, so do your due diligence before buying in. Okay, let's go look at say like here's okay. Well, let me go over the two stocks that I bought today, okay? So I bought FSI, which is Flexible Solutions, okay? They are in the materials sector in the specialty chemicals industry. Where I bought was around $3.80, somewhere in that area this morning. But other than that, so how I did this, how I looked at this stock is, you know, we do have this nice stage 2, nice uptrend, you know, prior uptrend from this base. This is a primary base, cup, handle. Then we go into this secondary base right here, okay? And this is forming more of kind of like a double bottom or a rounding bottom right here, but there is a lot of buying right off of this 200-day moving average plus the 50-day moving average. As you can see right here, the volume is just popping up right off that 50-day moving average, okay? And it's happening again. So when I placed this stock, when I placed this buy order, how I did this was, you know, let's go to the position sizing calculator. And I bought this at, let's say, at $3.80, okay, $3.80. I placed a stop at the low of that day, of today, which is at $3.57. I placed it, you know, 3 cents out, so $3.54, okay. So practically what I used on this account, this was a stop loss of 6.84%, okay, so I'm looking at least 20%, which, I mean, from, let's say if this can get up to the 52-week highs, it's going to run past, you know, it's north of 45%. So, I mean, yeah, I'm looking at, you know, I'm looking at about 7 times my risk, okay? That's what I'm wanting. Will it get to that point? No, not necessarily, because we don't know what a stock's going to do, okay, in the future. It's just trading. This is how this goes. So, but other than that, you know, let's say if it runs up to the $4.63, okay, there's my 20% right there. So now I do have my gain. I do have my 3 times my risk, okay? So I'm good with that. I'm good with that big time, you know. There's where the profit target will be taken at $4.58. I'm good with that. I'm good, okay? So other than that means I'm making some money here. So that's how I did that. But when I placed my what I'm willing to risk, what I'm willing to lose, just because of how this market has been, it hasn't been good since last week. But actually, it started a couple of weeks ago, kind of near Friday, a couple of Fridays ago. But other than that, I'm only willing to lose 0.0075. So I'm only willing to lose, 0.75% of the account, which, out of a $10,000 account is $75. So, I only position sized maybe on this, I think it was like less than 10% of the account of the total account equity. So, it's just of a caution tell. I want to see if this stock has some legs. Maybe it does have some legs. Maybe it can gain traction and keep moving. I mean, this is just part of technical analysis mixed with risk management and position sizing. And this is how you do this, okay? When you're trading stocks, it's just being cautious and saving your money for that next opportunity that's coming around the corner, because it's going to come around the corner and you're going to make a lot of money, especially with the speculator's edge. How we find these stocks when they're breaking out, yeah, you can get some major gains. I mean, they're popping up all over. Matter of fact, one of the charts that I went over not too long ago, LDL, which is Lidl Industries, that stock popped over 85% today. And I didn't recommend it, but I showed it on a video. So there's a ton of opportunity, and this is what we do here. This is how we make money. This is the opportunity that you have when you follow me. You listen to what I'm having to offer, and you just take notes. And you don't have to trade the stocks, but you just watch, because this is how this works. I've watched it for so long. I know that these the trades are good. The trades are good. Yeah, you're gonna have some losers. So what? That's why risk management is important. That's why you got to manage your risk. Okay. So let's move on to one more here, and this is the last one here, GSAT, which I bought here. And I bought this one around $1.59. Yeah, it's down just a few cents, but oh well. I'm not crying about that, because I placed my stop at the low of this at around $1.30, around $1.34. Okay, so if I get stopped out, I get stopped out with a minimal loss, and it's only, you know, like it's not much at all. So other than that, I think my position sizing on this one here was only maybe less than 8% of the account. So I mean, I'm not worried about that at all, because I want to see if this stock actually has some legs, if it's got some room to run. It does have a ton of room to run. Let's say if it gets to this 52-week highs, I mean, that's 80%. I mean, am I expecting that? I would like that. Yeah, don't get me wrong, I would love it. Anybody would love that in the market. But, you know, if it doesn't, it doesn't. So what? If I have to take a loss, so what? I still got money to move on to the next trade and the next opportunity to catch that one that's going to make a huge return, like TRCH, Torchlight Resources, just talked about that, or Jill, Jill, back in May. I mean, that's how it's done, okay? Just know there's going to be opportunity. I know how to hunt for them. I know how to locate them every day. It's happening every day. Even if the market's bad, it's happening. I'm making it happen here, okay? So subscribe, you know, listen, pay attention to this, okay? This is no bullshit gimmicks. This is real. This is how this happens. This is how huge money is made. This is how you get people like Mark Minervini, people like that, you know, David Ryan, Dan Zanger, these monsters, okay? These guys that have made millions upon millions upon millions, if not hundreds of millions, if not billions, in the market. This is how this is done, okay? It's the same process, but I know how to hunt very well, and I find these opportunities every day. And you just got to save your cash, save your supply, okay? Save your money, and just get ready, because the opportunities are coming. Not only that, with this market happening right now, the way it is, we do have some huge opportunity coming. And even if this market decides that it wants to crash, which I don't think it will, but I don't know that. I'm not a forecaster. I don't predict this stuff. But when the market does come around, yeah, we're going to have some major opportunity, or major opportunities, to make a lot of money. And this is where it comes in right here. And this is where the hard work, the effort, everything that you do, the motivation, the determination, the persistence, everything comes in place. The discipline, you have to be disciplined and ready for it, because when it's there, and the money is going to go crazy. Dan Zanger, matter of fact, he even talks about when he made his, you know, when he was making millions, okay, back in 2000, 99, 98, 99, he said there were so many trades that they were just popping up left to right, and he was taking them. You know, I don't know how much percentage points he was making on, you know, on the stocks themselves, but this guy turned, you know, he turned a small amount. I think it was like over a little, over 10,000 or 12,000 into over 10 million within a year and a half. I mean, think about that. Think about that. Come on. This is where we're at. This is how it happens. And here at TSE, we make it happen. We're going to make it happen. This is what it's all about. This is freedom. This is what you want. You want to live a good life. You want to live your dreams. You don't want to have to go to a 9-to-5 job and listen to some asshole on the other end, you know, calling you out or being a dickhead to you, you know. We don't do that. No, we don't take that. We're our own people, you know. We're our own character, our own person, and we need that freedom. And this is freedom. It's all freedom. That's all it's about. The market is nothing but freedom. It's the best thing that's ever happened, to be honest with you. And if you don't like capitalism, well, tough titty. I'm going to tell you that right now, because capitalism has brought a ton of wealth and has brought a massive opportunity to us humans, okay? Beautiful. So, other than that, yeah, there is some crony capitalism, don't get me wrong. I agree with you on that. But other than that, capitalism, for the majority or for the most part, is excellent. That's what we want. Businesses thrive. You can do your own thing. There's a ton of liberty with that, and that's what you want, okay? So, Other than that, so GSAT, yeah, I bought here at around $1.59. Real quick, we'll go over the how I position sized on this. So let's say I bought it at $1.59. Place my stop at the low of the day, which is at $1.37. I went 3 cents out to $1.34. Okay, so well, the stop was around 15%. Okay, that's not right because it was at 12% whenever I looked at that. So I must have bought a little bit cheaper than that. I might have bought it like $1.50 or something like that. Let me look at that. That is $1.52, somewhere around there. But anyway, yeah, it was around 12%. Okay, I don't like that, but you know what? The position size was appropriate, and it was adjusted accordingly with the risk management. So I'm looking for a profit of 35% or some 35%, somewhere around there. And maybe this stock will pump it out and give it to me. Maybe it'll pump up to 80%, up to that $2.98. Don't know, but that would be nice, huh? So, but other than that, I'm going to trade accordingly, and I'm going to keep position sizing myself if this stock decides that it wants to take off even more. I'm going to be buying into that. I'm going to be buying in the strength, and then when it starts to move back down, starts to come back up out of that little, consolidation, I'll buy some more because I'm looking for that. That's what I'm looking to do. Okay. So other than that, I mean, I only used, I was only willing to risk, percent willing to risk on the trade was 0.75% of the total account equity. So other than that, I mean, this is how this is done. But yeah, I mean, this is the risk management. If you want to follow my AWR, adjusting with risk, it's a little bit different because it splits it down the middle, and it's just a little bit different. I'll work with you even more on my AWR method. I like it, especially in this type of environment, because you don't go all in with your full position. So let's say if you take the trade, you take the breakout, because in this type of market environment, when you're taking trades and you're taking the breakouts tend to pull back and they can actually stop you out really fast. So instead, what my method does for risk management and position sizing, it actually allows you to stick to that position, and allows the stock to actually work itself out in the time being and move the way that it needs to move. Okay, especially when there's so much demand, so much buying, all that buying power, I mean, has to literally come to the market, and it has to show up in price, and it'll show up in price eventually, but you got to be patient. You got to let it work itself out, and that's the key. Just let it work itself out. So I mean, if it stops you out, it stops you out. It's just telling you the stock ain't working out. It ain't working out in your favor. So what? Big whoop. You took a loss. But when you're doing the AWR method, like I said, especially in this environment, it can save you a lot of heartache. It can save you a lot of pain, because there could be some massive gap downs in this market, and it could take you out. It could wipe you out. So, I mean, if you're all in this market right now and you're 100% invested, let's say in just one stock, let's say that stock tomorrow gaps down 30%, 40%. Okay, if you're 100%, you just lost 40% of your account. Yeah. That's a big no-no. That's enough to psychologically affect you, emotionally affect you, could even physically affect you, could spiritually affect you as well. So it's serious, and this environment is serious, and you got to be serious. You got to be selective. You got to play your odds and your probabilities. Okay, that's what it's all about. You do have to take a chance, though. That's another thing. You do have to take a chance, because if you don't take a chance, you ain't going to get anywhere. You're not going to get anywhere without taking a chance in this life, okay? And that's what you have to do. You got to take that chance. And you got to trust the system. You got to believe in it. And that's how that works. You got to believe in yourself. And when you believe in yourself, that's when it's even better, okay? That's when things really start unfolding. That's when the good things come. So be focused, be disciplined, and let's be prepared for whatever comes around with this market. This market can get really tough. It can get brutal. just do what you have to do and protect yourself while trading in this environment. But I'm going to tell you right now, there's going to be huge opportunity when it comes. And I know because I watched it in the market correction and the pandemic, and it was a thing of beauty. And I traded some stocks that went up 1,000 to 5,000%. Yeah, that's beauty. So yeah, other than that, I mean, I'm gonna leave it right here. Just be safe, protect yourself as you're trading, manage your risk appropriately. If you have any questions about that, you know, managing risk or anything of that nature, just ask me. Just leave a comment and I'll be more than happy to help you, you know, because this is what it's about. You know, I want to help you protect yourself. I want to help you make a lot of money. That's why I'm doing this. I'm giving you something that I've worked my ass off for, and it's paying off to me. So, yeah, I want it to pay off for you. I want you to live your dreams. I want you to be happy. And that's what it's all about. I want this world to be a little bit more happy. I want all of us to be happy, okay? And I'm going to go ahead and end it right there. So, a little bit emotional, huh? It'll be all right. That's part of it. So, thank you for watching. Thank you for subscribing. If you haven't already, please do. I've noticed that on my videos with say with a phone, with your Android or your iPhone, that the TSC logo does not pop up on this right hand corner down here. It should be right in this video of where I'm at. It should be right beside me, but I saw that it's not when I was looking at one of my videos on my iPhone. Well, I didn't see that logo. So but if you're watching on PC, it's going to pop up. So other than that, I mean, just subscribe. You know, you can click on the subscription button at the top, you know, and subscribe to me, please. I mean, I want you to have this information. I'm giving it to you for free. I mean, why not take it? Take it. So anyway, I hope you found the material enjoyable, you know, educational, a little uplifting, and you know, be prepared, discipline. All right. So other than that, leave a comment. Let me know what you think. If you got any questions, I'll be more than happy to help you. Also, I'll post a link down below on this video of my Patreon site. That's where you'll receive an exclusive stock list that comes from my proprietary scanning method. And yeah, it's great. Good stuff. So other than that, check out my intro video too. You know, it explains a lot in that video. So, but thank you again for subscribing and for watching this video, and I hope y'all have a great day. I'll be out with a market commentary here in a little bit when the markets close. I'm thinking about doing maybe a ratio video, going over some of my ratios, letting you know. Letting you see exactly, you know, what's going on. You know, my ratios are the gauge of the market. They're like your speedometer or your gauge in your car. You know, when you have your oil gauge, you know, your pressure gauge, you know, you've got your battery gauge, you got everything on there, your transmission, whatever, you know, your speedometer, you know, I mean, that's what these ratios are about. They're that. They're checking the internals of the stock market. And I'm telling you right now, they're calling for some interesting opportunities, either to the upside or to the downside. I don't know yet though, because they don't predict and we don't predict. We're not weathermen. You can't predict in the market. If you think you can, you already lost. And I'm going to tell you that right now, because I'm getting sick and tired of these other people, these other assholes, predicting things on YouTube and predicting things on the news when it ain't real. You can't predict because you can't tell the future. If you had the crystal ball, then you'd be extremely wealthy now, wouldn't you? Wouldn't you? Yeah. And you're not. And that's how that goes, because you can't predict. It's all bullshit. You don't have the crystal ball that tells the future. So what? Yeah, sorry for the rant, but that's how I feel about that. So all you assholes out there predicting what's going to happen to the markets, whatever. You're going to get crushed. You're going to lose. You're going to lose. And people here with the speculator's edge, we're going to win. Because we don't predict. We just trade. We trade in the present. And that's real. And that's how that works. So get ready. Opportunities await with us. Okay? This is money. So other than that, thank you again for watching. Here at TSC, we trade in the present, study the past for knowledge, and we follow the process of trading to build our future, okay? Thank you again for watching, okay? So opportunities awaits, my friends. I'll be back in a little bit.